What up, guys? It's November 13, and I want to go over my take over Callaway Golf earnings presentation, earnings numbers, and conference call from earlier this week. So I think it's important to note that I picked up Callaway stock back in late 2020 when they announced their acquisition of Topgolf. This was something that was transformative to a business that used to be just a golf apparel, golf equipment company, and made it into an entertainment powerhouse with Topgolf. So let's go over all that. I'm going to go over all these numbers, earnings presentation, conference call. But before we do, of course, please hit that like button. I really appreciate it. Shows me that I'm giving you value. I love to give you value. Please show the love in return. Also hit that subscribe button if you want to get more notices on when I drop a new video. My next video is probably going to be Wynn Resorts, guys. Okay, so let's get on with it. Right, so starting out, I want to start with the earnings presentation, their slides, and I think this is a really good representation of what the business is, so let's go over that here. So, of course, the golf equipment sector, or segment, rather, of their business starts with the Callaway brand and their equipment for Callaways. Of course, very, very obvious, golf clubs, golf balls, golf tees, golf bags, anything that's golf equipment to play the sport, that's the Callaway brand. Odyssey is a very small segment of that business, which is golf putters. Nothing too special there. And then we move on to the apparel side with Jack Wolfskin, which is sort of their kind of Columbia type brand for sweaters and insulated type jackets, fleeces, things of that sort. Then we move on to the Travis Matthew, which is their normal clothing, hats, beanies, shirts, golf shirts, type of like very golfy type apparel, but for everyday use. And you have a couple good ambassadors there, brand ambassadors like Matty Ice, Matt Ryan from the Atlanta Falcons, and you have Jimmy Garoppolo of the San Francisco 49ers, okay? I think for the 49ers, Jimmy Garoppolo won't be there much longer, but we'll see, all right? Not a football talk, it's a stock talk. So let's move on. OGO is a backpack type, travel backpack type business, which is also doing well. And of course, their Callaway apparel for shoes, gloves, shirts, hats, everything doing very well. Very strong on the apparel side. And of course, the biggest part of the business, Topgolf in the venues, Top Tracer, which is the technology for tracking golf ball in real time through digital means, through computers. They can implement this into the bays at Topgolf, but also they implement this during professional golf tournaments. And I think if you guys have seen a golf tournament on TV lately, you'll be able to see the little line that tracks the ball through the screen. That is Top Tracer technology. And of course, Topgolf Media, that's their advertising arm for Topgolf. So again, this gives you a pretty good understanding of what the company is, but let's move on to the important stuff, the numbers. So here we start with EPS, that's earnings per share, 14 cents reported versus 10 cents expected, all right? That is a beat on an adjusted basis. I'll go over adjusted basis and what that means in a minute. The revenue was $856 million versus $857 million expected. That is a slight miss. However, still okay in my book, all right? But it is a miss. Guidance for the full year was raised just slightly, $0.1 billion, 3.1 versus 3.0 was the prior guidance. That's a slight raise, nothing too exciting there. But the EBITDA, which is the earnings before interest, tax, depreciation, and amortization, raised to 424 to 430 million, in that range, versus the prior guide of 370 and 390 million. No 2022 guidance yet. So this is something that we heard on the conference call. They don't feel confident they can give us guidance for 2022 yet because the situation is so fluid in Southeast Asia with supply chains, with the Rona, with lockdowns in Southeast Asia and here. They're not able to predict a solid number, or they don't feel confident enough to predict a solid number yet for 2022. So they'll probably give us that closer to Q4 and their Q4 numbers. Now, these are the further type of financials here to go over, and we're going to go over GAAP and non-GAAP, but essentially we're going to go over the non-GAAP numbers because these are the adjusted numbers that we're talking about. So in the earnings presentation, they're talking about two different types of accounting practices, which are GAAP, which stands for Generally Accepted Accounting Practices, and non-GAAP, which are not generally accepted practices. But the reason they're doing non-GAAP numbers is because they have to account for two things: constant currency basis and non-recurrent non-cash adjustments. So currency basis is the foreign exchange rate. They cannot account through GAAP for the foreign exchange rate and also for the investments they've made and the cost of acquisitions of 5-iron and Topgolf. They're not counting those in the non-GAAP kind of financials, which is what we're going to go over and which is what the street is looking at. So here we start with net revenue, and we see that it's a healthy increase over Q3 of 2020 of about 80%. Solid number. Then we're looking at net income, which is down from Q3 2020. That's sort of your free cash flow type number. And adjusted EBITDA, those are your earnings before interest, tax, depreciation, amortization. They are up solidly. But then to take it further, I want to go over the revenue numbers by segment. And they're making it very easy here. They're saying Topgolf this quarter brought $334 million of revenue. This year alone has brought $752 million in revenue. And that is very healthy because that means in Q4, they're going to make this a $1 billion number in Q4. I think that is amazing because on top of increasing the revenues, they're increasing the size of their assets against their debt, which is very positive, I think. And we see here golf equipment and apparel doing solidly better this quarter over the same quarter last year. So things are trending in the right direction when it comes to revenue. We need them to start trending better on earnings and net income, which hasn't translated yet because of these investments they've made. But I think that will bear fruit over time. We need to hold on to the stock for a bit to be able to see that. And speaking about the health of the company, the balance sheet right now is sporting almost $1 billion in cash and a little bit over $1 billion in debt, which gives me a very C-grade type balance sheet, which I kind of give it a B- essentially because they are spending money to grow. And when they're about even or a little bit more heavily loaded on debt, it shows me that them making the investments they need to grow show confidence from management that they can make them into something good, into improving the health of the company and improving profitability, which is what we need here. So in essence, guys, the financials look fine, but I want to go over now the conference call and several details of the conference call that I think are very important for the business. So heading the conference call was Chip Brewer, President and CEO of Callaway Golf. He's telling us that there's an increase in walk-in traffic and social events booking, which leads to higher gain on sale and productivity, okay? What I take away from here is increased walk-in traffic, because I myself try to book a bay at my local Topgolf, and I cannot book one for at least a week out. At least everything is booked for the next week, which shows me my other option, which is to walk in and see what can happen. And for example, here in a tourist town like Las Vegas, I can see people going to Topgolf as walk-ins and then maybe having to wait an hour or two to get a bay, and then going to the bar, maybe seeing a fight, eating food. I could see that happening and increasing that gain on sale and productivity margin in the business, okay? The CEO also mentions that investing in Callaway is investing in modern golf, and I couldn't agree more. This is the most modern golf company there is. They're using technology to enhance entertainment and enhance the sport and allow more people to come in through the sport, specifically with their minority investment in the 5-iron golf business. These are local stores that are limited to about maybe 5-6 states right now, in which people can walk in, have a drink, have food, learn how to golf, get fitted for golf equipment, take lessons in front of a digital screen through computer assistance. So I think this is a very smart way to get more people involved in the sport, which increases their total addressable market. Another nice point here that he made, I think is very important. Topgolf is earning in Q3 as much as the entire business did in 2019. Huge for that business. Okay, now moving on to new locations. They have up to 70 locations this year, and they're looking at opening 8 new venues this year to date, for a total of 9 or 10. And for 2022, a total of 10 venues are planned for 2022. And if you see, there's Chip Brewer, the CEO, gives an interview on CNBC about 3 days ago, in which he says he plans to have up to 200 venues for Topgolf in the U.S. and even more of those overseas. So I think the growth plan is very much laid out here for Callaway. And then to close it out here, guys, so, strong year 22 of golf demand, okay? There's no expected decline in the popularity of golf in 2022. Travis Matthew, Jeff Golskin are strong. Same store sales are up 84% over 2020 and 50% over 2019 levels. Those brands are doing very, very good. Also, Japan and Korea, Callaway is a top performing brand in Japan and gaining traction in Korea, okay? And of course, we talked about no guidance this time for 2022. So let's move on from this. So in conclusion, of course, here's the chart of Callaway Golf and the metrics for Callaway Golf from Yahoo Finance. We can see here that there's a PE ratio of almost 15, 14 and a half price to earnings ratio, which is pretty cheap for the stock. However, we see here a forward PE of 117. Quite expensive, but here what you have to understand is there's a lot of stuff cooked in with very little earnings, very little net income in comparison to what they could be making if they never made the investments in new Topgolf locations, they never acquired Topgolf, if they never made investments in the 5-iron business. So I think this number is a little bit misleading when it comes to the forward PE metrics. But what I want to use to kind of value this company is essentially the market cap itself to value this company. And what can I see in the future? I can see a market cap of $15 to $20 billion, reflecting a stock price anywhere from 70 to $100 in the future. So I think that this is a very good business. I think that anything under 28 is a good way to get sort of your foot in the door if you don't have a position. For myself, I own this stock at $17 a share. Not looking to add at this time unless it falls maybe under 26. That's when I would like to add some shares so I don't get my cost basis or violate my cost basis so it goes over $20 a share, all right? So guys, let me know if you guys have any questions about Callaway, the stock. This is a very good business that's growing, and we can see the financials are strong. Demand for golf is strong. So it's one of my favorite stocks in the portfolio. It is not one of my biggest positions. It's one of my smallest positions. But I think throughout the years, it will grow into a more significant position if there's a window of opportunity to add more shares, okay? Let me know if you guys have any questions. Join us, the Stock Gladiators Discord. Hit me up on Instagram. The link is on the description below. Peace out.